to learn today, I would go back to the previous lesson and then I'll do a quick run through, then we can continue with what we have to study today. So the meeting is officially opened for today's section, today being the second day of our training section. All right, so I'll quickly go ahead to share my screen. With you all, then we can kickstart. All right, so my screen is now being shared. Kindly type 555 in the chat section if you can see my screen. Just type 555 in the chat section if you can see my screen. I'm going to share my screen right away. Type 555. Okay, good. So it means you can all see my screen. All right, so I'm going to quickly take you through today's section or today's version of our training. Okay, so yesterday we learned about the anatomy of the candlestick. This is a quick recap to what we studied yesterday. So we learned that the candlestick has a different parts that we need to know, and we also studied that there are two different groups of people in the market, and that is what the candlestick represents. Okay, so we have the bullish candlestick, which represents buyers in the market. Okay, and we have the bearish candlestick, which also represents sellers in the market. And then with the bullish candlestick, we said that always the close is above the open. The close is above the open. So it means that this candlestick opened here and then closed at this point. So the close is above the open. That is for the bullish candlestick. And then we also learned about the wick. We have the upper wick and then the lower wick. And then the tip of the wick is the highest point that the price reached at a certain or at a particular point in time. And then the lower wick, the tip of the lower wick is the lowest point price got to. The same thing applies to the bearish candlestick. The only difference is that when it comes to the bearish candlestick, the opening is above the closing price. The opening price is above the closing price. So the candle or the price opened at this point and then it closed at this point. Okay, so the open is always above the close. That means price went down and then closed at this point. And then the upper and the lower wick, the highest price came and then the lowest price came. Okay, so that is a summary of what we did yesterday. So I'll quickly take you to what we have to study today. For today, we are going to study candlestick patterns and then the psychology behind their formation. Candlestick patterns and then the psychology behind their formation. Now, don't let any of these names you are seeing on the screen frighten you. Okay, you are not to have them in mind. The only thing is that you have to know the psychology behind the formation of a particular candlestick. Okay, but these various candlesticks have names. So the first one, we have the engulfing bar candlestick or the engulfing bar. We have the Doji candlestick pattern. We have the Dragonfly Doji pattern, which I look at all these candlesticks. Okay, we have the Gravestone Doji pattern. We have the Morning Star candlestick pattern. We have the Evening Star, the Hammer candlestick pattern. We have the Shooting Star, the Harami pattern, and then the Tweezer tops and bottoms. Okay, so this is what we are going to study for this section. So kindly take note. We shall take them one by one, or we shall take them one after the other. So the first one, or before I talk about the first one, I want us to look at these candlesticks you are seeing on the screen. We said that the green represents the bullish candlestick and then the red represents the bearish. Okay, so the bullish refers to buyers in the market and the bearish refers to what? Sellers in the market. Okay, and then you could see this is a candlestick with a long body size, and this one has a shorter body size. Okay, so long body versus short body, what does that mean? Now if you see a candlestick with a long body size, it refers to a strong buying pressure. Okay, this is a strong buying pressure in the market, a strong buying what pressure. And then this long bearish candlestick refers to a strong selling pressure in the market. So if you see a long red candlestick, it refers to a strong selling pressure in the market. And then the green one is a strong buying pressure in the market. So the short body, the candle with the short body, refers to as a little buying pressure. Okay, a little buying pressure or a little trading activity in the market. And then the smaller bearish candlestick refers to a small or a little selling pressure. Okay, so let's kindly take note of this. When you see a long body, it refers to what? A strong buying pressure, and then a strong selling pressure. This is little selling in the market or a little selling activity, and then a little buying activity. Once we have this idea, let's proceed to the next one. So this is another form or shape of a candlestick you are likely to see in the market. Okay, you are likely to see in the market. So we have the as you can see, we have the we have this bullish candlestick, okay, with a very long upper wick or upper shadow. This is what a bullish candlestick with a very long upper shadow, okay. And this is also a bearish candlestick with a very long lower shadow. What does this mean, or what is the psychology behind the formation of this candlestick? Now if you see a candlestick with a long upper wick, okay, what it means that you could see that the body of the candle is very small and then has a long upper wick. What it means is that the price of this candlestick opened here, okay, and then the price came a little lower, and then buyers came into the market. When the price got a lower up to this point, because the price was low, more buyers came into the market, and then they push price high up to this point, okay. And when they push price high up to this point, we had sellers coming into the market to push the price back down close to the opening price, okay. So it means that this will be the closing price of this candlestick. Now you could see that this is a strong selling pressure. The price got as high up to this point, and then sellers came into the market to push the price down back closer to the opening price. Okay, so this is a long upper shadow, a candle with a long upper shadow. What it means is that there are more sellers in the market. When you see a candlestick forming this way, it means that there is a more selling pressure in the market, okay, because the price went as high up to this point, and then the sellers push the price back close to the opening price. So when you see a candlestick forming like this, it means that there is more selling pressure in the market. There are more sellers in the market more than buyers. That is what it means when you see a candlestick like this. Now the next one is the candlestick with a long lower shadow or lower wick. Okay, a long lower wick. Now what does this candle also mean? Now this is the opening price of this candle. You remember that for a bearish candlestick, the opening is above the close. So what it means is that this candlestick opened at this section, at this point, and then the price went a little higher, and then sellers came into the market to push the price back down as low as this point. When the price came as low as this point, buyers came into the market and then they pushed the price back close to the opening price. They pushed the price from this low close to the opening price. Okay, so what it means is that there are more buyers in the market. Therefore, they were able to push the price back close to the opening price. So when you see a candlestick forming like this, what it shows or what it indicates is that there are more buyers in the market. That is why they were able to push the price close to the opening price. So that is the difference between these two candlesticks with a long upper shadow and then a long lower shadow. One represents more sellers in the market and one represents more buyers in the market. So kindly take note of these two candles or the meaning of these two candles. I would proceed to the next candlestick, which is called the engulfing bar candlestick pattern. The engulfing bar candlestick. Now, when we say engulfing, it means that it has overshadowed. Okay, engulfing means it has overshadowed. So you could see that there are two different candlesticks here. The first one is the bullish candlestick, and then the next one is the bearish candlestick. So what we are talking about here is the bearish engulfing bar. The bearish engulfing bar. Now you can see that this previous candlestick, which is the bullish candlestick, have been engulfed by this bearish long candlestick. Okay, this bearish candlestick has engulfed this previous candle. The opening and then the close has engulfed the opening and then the close of this candlesticks. Okay, so you could see that this bullish candlestick has been overshadowed by the engulfing or the long bearish candlestick. So if you see a candlestick forming like this in the market, it means that there are more sellers in the market. Buyers have been engulfed or have been overshadowed by sellers. When you see a candlestick forming like this, these two candlesticks forming like this, it means that buyers have been engulfed by sellers. Now, it is not always the case that the bearish engulfing engulfs only one candle. It can engulf about 2 or 3 previous candles. But to be considered a bearish engulfing, it must engulf completely the previous candle, which means that, or the psychology behind this is that there are more sellers in the market, or sellers have been engulfed by buyers have been engulfed by sellers. So kindly take note of this. When you see a candlestick forming like this in the market, the psychology behind is that sellers are in control of the market. Sellers are in control of the market. The next one is the bullish engulfing bar. The bullish engulfing bar, which is the opposite of the bearish engulfing bar. You could see that this previous candle is a bearish candle. Okay, now the bullish engulfing bar or this bullish long candlestick have overshadowed the previous bearish candle. The open and the close have been engulfed, has engulfed this previous one. So if you see a candlestick forming like this in the market, what it shows is that buyers are in control of the market. Buyers are in control of the market. Therefore, they have pushed price above the open and the close of the previous candlestick. So let's take note of this candlestick formation. When you see a candlestick like this, the psychology behind this is that there are more sellers in the market. There are more sellers in the market, and they are willing to push price as high as they can. All right, so I said the bullish engulfing is just the opposite of the bearish engulfing. Okay, so there are two opposites: bullish engulfing and then bearish engulfing. All right, so the next one we are going to talk about is called the Doji Candlestick. The Doji Candlestick. Now, with the Doji Candlestick, you could see that the body of the candlestick is very small. It's very, very small. Okay, it is very difficult to identify the opening price and then the closing price. So with the Doji Candlestick, the opening price and the closing price are at the same point. You cannot differentiate the opening price and then the closing price. So what this means is that when the price open at this point, sellers push the price down to this point. Okay, then we had buyers coming into the market also pushing the price all the way up to this high point. Okay, so this is the highest point price got to. Then we had sellers coming into the market once again to push the price back to the closing price. Okay, pushing the price back to the closing price. Now what this means is that there is indecision in the market. The sellers and then the buyers are what? Indecisive whether price should go up or it should come down. Okay, so the buyers push the price up, sellers push the price down to the opening price. So when you see a candlestick forming like this in the market, it shows you that there is indecision in the market. Okay, so for now, what is important is to take note of the shape of the candlestick and then the psychology behind its formation. So that is it for the Doji Candlestick. The next one we want to talk about, I hope we are taking note of whatever we are doing. If possible, I will encourage you to write things down, okay, and write things down. But anyway, I am recording the meeting. I would share the link to this meeting in the group, so you can take your time and later put down important notes. Okay, so what we are doing is that we are learning the language of the market. You should be able to identify the psychology behind the formation of a particular candlestick, and then the decision or the information is given you in the market. All right, so the next candlestick we want to talk about is called the Dragonfly Doji. Okay, the previous one was the Doji, and this is the Dragonfly Doji. Dragonfly. You could see that it has a very small body here with little or no higher price. You can't identify any higher price here. Okay, so let's look at the psychology behind the formation of the Dragonfly Doji. The Dragonfly Doji. Now the Dragonfly Doji is considered as a bullish candlestick. A bullish candlestick. Now why is it considered as a bullish candlestick? You realize that the price opened at this point. Okay, the price opened at this point. Then sellers push the price all the way down to this point. Sellers push the price all the way down to this point. Then we had buyers coming into the market to push the price back to the what? To the opening price. So buyers push the price back to the what? The opening price. So you could see that the opening price and the closing price are at the same point. But what characterizes this candlestick is the long lower shadow. What differentiates this candlestick is the long lower shadow, which means that there were more buying pressure in the market. Therefore, buyers were able to push the price back to the what? To the opening price. So if you see a candlestick forming like this, it's an indication that there are more buyers in the market. There are more buyers in the market. Please kindly take note of all that we are doing for today, okay? Because in our next meeting, we shall combine this different candlestick shapes and then the psychology behind their formation with a different lesson, with support and resistance. When it occurs at a support, what does it mean? When it occurs at a resistance, what does it mean? Is the market changing trend, or is the market ranging, or whatever? So it is very important to take note of the various candlesticks and then the psychology behind their formation. Okay, so I guess we can continue. So this is the Dragonfly Doji, and we have the Gravestone Doji. The Gravestone Doji, which is an inverted or the opposite of the Dragonfly. Okay, so the Gravestone is just an opposite of the Dragonfly. So you could see that the opening price and then the closing price are at the same point. Now what this means is that when the price opened at this point, buyers pushed the price all the way up. Then sellers came in the market to push the price back to the opening price. So what differentiates this candlestick, or what characterizes this candlestick, is the long upper shadow. The long upper shadow, which indicates that there are more sellers, or there is more selling pressure in the market. So note the difference between the two. The Dragonfly Doji has a long lower shadow, and then the Gravestone Doji has a long upper shadow, which indicates that there is more selling pressure in the market. I believe we can continue. All right, so before we continue, at this point, let me know if there is any question. If there is any question so far, kindly unmute your microphone and then ask. Before I continue with the last two sections. The last two candlesticks that we have. At this point, is there any question? If there is no question, you can just let me know so I can continue. All right, so silence means concerned. Okay, silence means concerned. I want to continue. Let me finish it, and then I can give time for questions and contributions, or questions and answers. So from the Gravestone Doji, we move on to the Morning Star. The Morning Star. Now the Morning Star candlestick pattern are three different candlesticks together. Okay, three different candlesticks. Now the first one is a bearish candle. The first one is a bearish candle. Then the second one is a very small candlestick in the middle. Okay, a very small buying pressure, a little buying pressure in the middle. Then the second one is a very long bullish candle. So you have a baby or a smaller candle forming between a bearish candle and then a bullish candle. Now, what is the psychology behind the formation of this candle? What it means is that sellers would push the price back, or sellers were in control of the market. So they push the price back to this point. Then the next candlestick that forms was also a bearish candlestick. Now here, the idea is not concentrated on whether the middle candle is a bearish candle or a bullish candle. Okay, now there was a high selling pressure here. Then the next section here, you could see that there was a very small trading activity here, meaning that sellers has lost their momentum. They have lost their selling pressure. Okay, so a little selling occurred here. Then the next candle that forms, you could see that there was a very high buying pressure in the market, which indicates that this candlestick formation indicates that what buyers have taken control of the market, and then the market trend is about to reverse. Here at this section, sellers were in control of the market, so there was a very high selling pressure here. Then a very little selling pressure occurred here. Then the next candlestick that forms was a very high buying pressure. What it means is that buyers have taken control over the market from the sellers. So the Morning Star comprises three different candles. The first one is a bearish candle. Then the second one is a very small candle. It could be a bullish candle or a bearish candle, which represent a small selling activity, which means that sellers have lost their momentum or have lost the pressure in the market. Then buyers took over from the sellers here, and then there was a high buying pressure in the market up to this point. So when you see a candlestick forming like this in the market, it tells you that buyers have taken control over from sellers, and then the market is about to go up, or the price is about to go up. So that is it for the morning star. So the next one is the evening star candlestick. The evening star is just the opposite of the morning star. Okay, so here you could see that the first candlestick was a bullish candlestick. Then the next one, this bullish candlestick represents a high set buying pressure. The next one, you could see that buyers lost control, or they lost their momentum, and then there was a little selling activity here. And then the next candlestick that formed, you could see that there was a high selling pressure in the market. What it means is that sellers have taken control of the market from the buyers, and then the market is about to reverse. Okay, so kindly take note. The evening star is a bearish candlestick formation, and then the morning star is a bullish. Bullish means buyers have taken control over the market. Then this one, you could see a bearish means sellers have taken control from the buyers. So you have to take note of this candlesticks, and you should know the psychology behind their formation. When you see a candlestick forming like this, you should know that sellers are taking control over the market, and they are about to push the price lower. Okay, so the next one is the hammer bar, or the pin bar. Okay, so you could see that it has a small body. The opening price is here, and then the closing price is here. You could see that it have a little or no higher price here. Okay, and what characterizes this candlestick is the long lower shadow. Okay, which makes this candlestick look like a hammer. Okay, it looks like a hammer. Now when you see this, it means that the price opened here, and then it went, the price opened here. Okay, then the sellers pushed the market all the way down to this point. Then we had buyers coming into the market to push the price back up above the opening price, but it didn't go as high as we used to know. Okay, it went a little above the opening price, and a candlestick that looks like a hammer forms here. When you see this type of candlestick forming in the market, it means that there are more buyers in the market. Buyers are in control of the market. They have been able to take control of the price from sellers, and they are able to push the price up to this point. So when you see a candlestick like this, it should tell you that buyers are in control of the market, which means that the hammer pin bar is a bullish candlestick. It's a bullish candlestick. It tells you that buyers are in control of the market. Okay, so it has a long lower shadow, and it has a head which looks like a hammer. So note the difference. Then we have the shooting star, which is also a bearish bar. Okay, it's just the opposite of the hammer. It's just the opposite of the hammer. We had price opening at this point. Okay, opening at this point, and then we had buyers pushing the price all the way up. Then sellers came into the market to push the price back down up to this point. Okay, as low as this point, and then it went a little up, and then it closed. This is the closing price. It closed from here. So you could see that this is just like an inverted hammer, which shows that sellers have taken control of the market. Sellers have taken control of the market. All right, so This is the next section, which will be the last but one section, which is called the Harami pattern. The Harami pattern, which indicates a bullish inside bar. Okay, so you could see a long bearish candle here, and then a small baby candle or a smaller candle here. Now what it means is that sellers were in control of the market. They pushed the price all the way down here, but they lost their momentum. They couldn't push the price a little lower, or they couldn't push the price lower again. Okay, so you could see that there was a strong selling pressure here, and then all of a sudden we had the market ranging over here. It couldn't go down any longer, and then it was ranging at this point. What this means is that sellers have lost momentum, and then it is likely that buyers is going to push price up. Okay, the sellers are not able to push the price down again, and it have been taken over by buyers. There's a small buying pressure here, which is a smaller candlestick. So kindly take note of this candlestick formation. You should know that when it happens this way, it means that sellers have lost their momentum, because they were able to put a more selling pressure in the market. When it got to this point, they couldn't push the price any longer, and the price closed at this section, and then we had a small selling or a buying activity here, which indicates that the market is about to be reversed to the upside. Then we have the Harami pattern, which indicates the Harami. This is also the Harami pattern, okay, which is the bearish version of the of this one, which is the bearish version of this one. Indicates bullish. Okay, it means that the market is about to go up, and this indicates a strong buying pressure in the market. Buyers moved the price all the way up to this point, and you could see that they lost their momentum in the previous section. In the previous section, they lost their momentum. They couldn't push the price higher again. So there was a small trading activity here, or selling activity here, which indicates that the market is likely to reverse to the downside. Okay, buyers are not able to push, or the buying pressure is not able to go up again, and then it's likely that sellers are about to take control of the market and push the price all the way down. So this comes to the end. This comes to the end, of which I'm going to talk about this last one, and then we'll close for today's section. So we have the Tweezer top. The Tweezer top. Don't worry, I'm going to share the link with you after the section, so you can read over whatever that we have discussed for today. We have the Tweezer top. The Tweezer top. Now the Tweezer top, the first, we have two versions. Okay, this is the bearish version, and this sorry, I think there is a little mistake here, but anyway, let me focus on the first one. We have the first one to be the bullish candlestick. Okay, the bullish candlestick, which shows that there was a strong buying pressure in the market. Then the next section that occurs, the sellers push the price back to the opening price. So price open here, buyers push the price all the way up to this point. Then sellers came in the next section, then they pushed the price back to the opening price of the previous section, which indicates indecision in the market. Okay, it indicates indecision. When you see a candlestick with the first one being a bullish candlestick closing here, and then the next one, the next section, the candle that forms also pushes the price back to the opening price. It means that there is indecision in the market, and the price is likely to go down. Okay, because sellers have pushed the price back to the opening price. Okay, then when you see the opposite of this, when you see the red candlestick in front of the green, okay, it shows that the market was bearish. Then all of a sudden buyers took control and they put the price back to the opening price, which also shows that there's indecision and the market is likely to go up. So if we have a bearish candlestick to be the first one, it means markets, there was a selling pressure and then buyers took over from the next section and pushed the price back to the opening price. So kindly take note of the tweezer top and then the tweezer bottom. I'll share the link with you so you can identify it well in the book. Okay, so at this point we have come to the end of today's study. I'm giving opportunity for questions and answers. So we have been able to go through all these different type of candlesticks and the formation behind them. Okay, the formation behind them. I'm giving opportunity for questions and answers. When we are done, I'll just open a chat. I'll open the chat and then we'll try to look at examples of this candlestick that we have talked about. Please kindly unmute your microphone and ask any question that you have or you want to ask. Is there any question? I think I have to start mentioning names. All right, so we have Daniel, we have Freshla, we have Edu Amwankwa, we have Wisdom, we have Gloria. Please, if you have a question, let me know. Or if you don't want to ask, you can type it in the chat section. If you have a question. In the next 5 minutes, we should be able to bring out our questions so we can give answers to them. I'll share the link to this study on the platform when we are done with the meeting. Is there any question? All right, so we have one question. Let me read it all to us. So Freshla is asking, is there a way both the buyers and sellers have control? At any point in time, it's either the buyers are in control of the market or the sellers are in control of the market. Okay, and then in a situation, for example, okay, look on the screen. For example, in a situation where we have the Doji Candlestick, where the closing and then the opening price and the closing price are at the same point, okay, and then we have an upper wick and then a lower wick, which indicates indecision in the market. It means that nobody is in control of the market. Whether the price should go up or down. So at a particular point in time, it's either the sellers are in control of the market or the buyers are in control of the market. I would like to show you a chart. All right. So this is a chart I want to show you. Okay, this is a gold. This is a price chart for gold. Okay, let me show you an example an example of a bullish engulfing. Okay, an example of a bullish engulfing. Let me enlarge it so you can see it well. Let me enlarge it. You could see that the first candlestick was what? A bearish candlestick. Okay, Then the next one that forms was a very long bullish candle, where the opening, the high and then the low and the high is engulfed, if engulfed the previous candle. Okay, so this is a bullish engulfing. This candle has engulfed the previous candle, which was a bearish candle, which means that buyers have taken control of the market, and it shows that market is going to go up. And then you could see that from here, after the bullish engulfing candlestick, price went all the way up to this section. Look, it went all the way from this part up to this section. So when you see a bullish engulfing candle like this, it tells you that buyers have taken control of the market and they are going to push the price up. So you can see from the screen or from the chart that after the bullish engulfing bar, the price moved all the way up to this section. Let me likely show you an example of a bearish engulfing. Let me see if I can find a bearish engulfing from here. Bearish engulfing. Let me see if I can get the bearish engulfing. So this is an example. This is an example of a bearish engulfing. Okay, this is an example. So you could see that the previous candle was a bullish. Let me enlarge it for you to see it well. You could see that the previous candle was a bullish candle. Then later the candle that formed was a very strong selling pressure, which is a bearish engulfing. Okay, the opening and then the close has engulfed the previous candle. Now when this forms, it means that the sellers have taken control over the market and they are going to push the price down. So you could see that after the bearish engulfing, price came all the way down to this point before it moved up. Okay, and this is an example of a tweezer top, the last one we talked about. Look at this candlestick forming here. Okay, look at this candlestick. Let me show you this candlestick that has formed here. Look at this candlestick here. Okay, this is a tweezer top. Let me go back to the chart and show you the tweezer top. This was a tweezer top. Okay, sorry, I said tweezer top. It's rather evening star. Okay, there's an evening star. You could see that the first one was a bullish candlestick. Then the next one was a small candlestick that formed here. Then the next candlestick that formed was a strong selling pressure. Now strong selling pressure means sellers have taken control over the market and they are likely to push the price down. They are likely to push the price down. So if you could see, let's go back to the chart. After the strong selling pressure, you could see that the price came all the way down. So the first one was a bullish candle. Then the next one was a small selling activity here. Then the next candlestick that formed was a strong selling pressure. Now after the strong selling pressure, it tells you that the psychology here is that the price is about to go down because sellers have taken control over the market. So lo and behold, after this strong selling pressure, the price came all the way down to this point. Okay, so that is it. I hope that we'll be able to use this knowledge. We'll go to the charts and then identify all these different candlestick shapes that we have talked about. Okay, there is no time to go, take you through the chart and identify all the candlestick patterns we have talked about. Probably we'll do that in a different section. Okay, in a different section. So kindly take note of that. We have come to the end of today's meeting. I'm giving two people the opportunity to ask questions. Then from there we'll end the section. All right, I'm giving opportunity for questions. Do we have any question? I think there is no question. All right, so we'll end the meeting here. We shall continue tomorrow, which will be our third day for this boot camp, for this study, and I know that it's going to really help you. Now, if you want to look at the chart and know these various candlestick patterns we are talking about, you can go to www.tradingview.com. Let me put that in the section. www.tradingview.com. It's going to be a different study where I'm going to show you how to look at the price chart for every currency, pairs, or any commodity. We shall do that in one of our sections. And for the meantime, if you want to identify these candlestick patterns, you can go to TradingView and then open the price chart for any currency or a commodity, and then you can you can refer to this study from the chart, and then you can also I'm going to share a link on the platform, or I'll share a link in the description. Okay, just check in the description. I'll share a link there to the Candlestick Trading Bible, where you can download the book and start reading. So kindly take notes. I'll see you tomorrow at the same time. Enjoy your evening and have a good time. Bye.